Good day. Ever wondered what's actually inside Australia's most popular ETF, VAS? Today, we'll peek inside the VAS basket, see how it's built, and check out how it's performed for Aussie investors. VAS stands for Vanguard Australian Shares Index ETF. It tracks the S&P ASX 300 index, meaning it holds shares in Australia's 300 biggest companies, 200 large caps and 100 small caps. Think of VAS as a giant shopping basket. Inside are banks, mining giants, healthcare leaders, property trusts, and more. It's one of the easiest ways to earn a slice of Australia's economy. Nearly half of VAS is made up of just 10 big names like Commonwealth Bank, BHP, CSL, NAB, Westpac, ANZ, Wesfarmers, Macquarie, Goodman Group, and Woodside Energy. When you buy VAS, you're not just buying one company, you're buying tiny pieces of all 300. That's instant diversification, which helps spread your risk. How has VAS performed? Over the last 5 years, VAS returned about 9.6% per year. In 2024 alone, it climbed more than 10% and is finishing the year strong. Its long-term performance shows steady growth, even through market ups and downs. VAS pays dividends to currently around 3.2% to 3.4% yield, paid quarterly. That's regular income on top of capital growth. Just remember, dividends can go up or down each year. VAS is also known for its low fees, just 0.07% per year, and high liquidity, with over $21 million traded daily. That means it's cheap to own and easy to buy or sell. Remember, this video is for education only, not financial advice. Always do your own research or talk to a licensed advisor before investing. Now you know what's inside VAS and how it's performed. If you found this helpful, give us a thumbs up, ask your questions in the comments, and subscribe for more stick-figure Aussie ETF guides. What ETF should we open up next? Let us know below.